a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about ARK ETFs. We are taking a deeper dive into ARK ETFs, and we're talking about ARK because I get so many questions from our clients, my family members, friends about ARK ETFs, whether they should buy ARKK or ARKG or ARKW. So I decided to take a deeper dive into these ETFs. In fact, the biggest story in the ETF market last year was ARK ETFs, because 3 of ARK ETFs were among the top 10 performing ETFs, and this firm, which is managed by Cathie Wood, saw its asset base grow to over $41 billion from less than $3.5 billion at the beginning of 2020. So that was an incredible asset growth of over 1,000%. And with that, ARK became one of the top 10 issuers, ETF issuers. And now so many people follow what ARK is doing that last week when they filed for a space ETF, ARK's Space Exploration ETF, ticker symbol ARKX, that sent shares of some of the space companies surging. Shares of Virgin Galactic, Mexa Technology, they were up more than 16% that day because people were trying to front run the launch of that ETF. Now, what is ARK? ARK has 5 actively managed ETFs and 2 index ETFs. They focus on disruptive innovation. The actively managed ETFs are ARKK, ARKW, ARKG, and we will talk about those 3 ETFs today because they were the best performing last year. And they have a fintech ETF, ARKF, and another autonomous driving ETF, ARKQ. The index ETF are Israel ETF and 3D printing ETF, but it is the actively managed ETFs which have done very well. ARK and Cathie Wood became famous in 2018 after that bullish call on Tesla. And Tesla stock was trading around $300 in 2018, and the company was facing many production and other issues. And at that time, ARK came up with a price target of $4,000, from $300 to $4,000 in 5 years. And at that time, it sounded crazy. But if you see, Tesla is now trading at more than $800. So already over 4,000 on a split adjusted basis. So that call made her very famous. And Tesla shares surged more than 700% last year in 2020, and they contributed to a lot of surge in 3 of our ETFs, which have a lot of share of Tesla. Tesla is one of their top holdings in those 3 ETFs. Now, whether the success can continue going forward, it is very difficult to say because the firm has become so big. It is attracting so much money. So going forward, they will find it a bit difficult to find smaller, innovative companies. And we do not know whether Tesla will surge 700% in 2021 too. Possible, not very likely. So they already own more than 10% in 15 different stocks. And with that kind of ownership, it would become difficult for them to find, more innovative companies and continue the kind of success they had in 2020. And many people point out that in the history, there have been many high-flying funds and fund managers. They had wild success, and then they came back to earth after that wild success. Many people point out the similarity between ARK funds and the famous Janus 20 fund, which had tremendous success in late 1990s and early 2000s. And then after the internet bubble burst, the funds were down about 50%. Now, we do not know whether that would happen to ARK. Probably no, not likely. But let's take a look at the ETFs and their performance since inception and what contributed to their performance in 2020 by going to the code pages on Zacks.com. So the first one I wanted to highlight is the ARK Innovation ETF, ticker symbol ARKK. It is actually their flagship fund. It has an expense ratio of 75 basis points and has become hugely popular and has over 22.7 billion in assets. Now it is the largest actively managed ETF now. This is up about 168% over the past 12 months. Now to learn more about this ETF, please go to the code page on Zacks.com. You can read our research report, articles, etc. And then you can go to the external homepage, ARK webpage for this ETF and learn more about this ETF and holdings, etc. So it's, as it says, this holds companies in the areas of genomic revolution, industrial revolution, next generation internet, fintech, all kinds of revolutionary companies that are benefiting from disruptive innovation. Now, taking a look at the top 10 holdings in this ETF, as I mentioned, Tesla is the top holding, about 10%, and the company has benefited a lot from the fund has benefited a lot from Tesla's incredible surge. Roku is about 8%, and Roku has also done very well. CRISPR, Square, Teladoc, Invitae, Zillow, all these companies have done very well, benefiting the ETF. Now, one more tool I wanted to show you on Zacks.com. We have holdings here on the code pages too. And our holdings are 1 or 2 days behind ARK, the holdings on ARK pages, because it takes some time to collect and everything. So you will find most up-to-date holdings on the ARK page, but you can learn some more about these holdings through our tool. So you can look at the 52-week change, and you will see which of their holdings had done very well. You can also read our research reports on those companies. So you will see that in addition to Tesla, Twist, which has a relatively smaller weight and did not contribute so much to the success of the fund, but Twist and Pacific Biosciences and Seres Therapeutics, they also surged more than 600% last year. Now, the second ETF I wanted to, before we highlight the second ETF, I wanted to show you the long-term performance of this ETF. So on this slide, I have the performance since inception in October 2014 for ARKK, and I have compared that with QQQ, the NASDAQ 100, the ultra popular NASDAQ ETF, because that is also a large cap growth ETF. So you will see that the fund did not actually outperform QQQ in its initial years. In fact, till mid-2017, it was underperforming QQQ, the Qs. Then it started outperforming, and in fact, mid-March last year, its return since inception was not much more impressive than compared to QQQ's return. But you will see that when the March rebound came, the fund soared because it helped so many companies that benefited from coronavirus-driven trends. So this, you can see that spike in the performance since March of 2020. Now, the second ETF I wanted to highlight is the ARC Genomics ETF. This was actually their best performing ETF last year. It gained over 210% in the past 12 months. As the name suggests, it holds genomics companies, 75 basis points expense ratio, and this also is pretty huge with over 10 billion in assets. Now, again, you can go to the quote page on Zacks.com. You can learn more about the ETF by reading our research report, and then you can go to the quote page on Zacks.com. So it holds companies that are involved in CRISPR, which is the famous gene editing technology, and two women scientists were awarded Nobel Prize in chemistry for CRISPR technology. So it holds companies which are involved in CRISPR, targeted therapeutics, bioinformatics, molecular diagnostics, stem cells, and agricultural biology. Looking at the top 10 holdings, Pacific Biosciences, Teladoc, Twist, CRISPR, these are the top holdings in this ETF. Now, Twist, which we saw was up more than 600% last year, has a significantly larger weight in this ETF, more than 6%. And you can also look at the performance of the holdings through the tool on Zacks.com, and you will see that among the top performing companies, which were up more than 400% last year, were Twist, Pacific, Ceres, and Intelia. Now, the third ETF, which I wanted to, before the third ETF, the long-term performance. So on this chart, I have the long-term performance of ARKG versus the Spider Biotech ETF, because this is a biotech genomics ETF, so I decided to compare with XBI. And this shows the performance since ARKG's inception in 2014. And you will see that ARKG was actually underperforming XBI for a long time, till 2019. All those quarters it was underperforming. And again, like ARKG's also significant performance came after March of last year. It remains to be seen whether those companies can continue to surge going forward too. Now, the third one I wanted to highlight is ARKW. It's the next generation internet ETF. As the name suggests, it holds companies which are involved in next generation of internet evolution. This has an expense ratio of 79 basis points, has over 6.2 billion in assets, and this is up over 151% over the past 12 months. Now, again, to learn more about this ETF, you can go to the quote page on Zacks.com. And from there, you can go to the external home page, and you will see that it holds companies which are involved in cloud computing, cybersecurity, e-commerce, big data, and AI, mobile and Internet of Things. All these benefited a lot and continue to benefit from coronavirus-driven trends. Then social platforms, blockchain, it has exposure to Bitcoin through GBTC. So that also benefited this ETF. Now, Tesla is a top holding in this ETF too, about 10%. Then Roku and Bitcoin through GBTC. Square, Teladoc, Tencent Holding, Spotify, Pure Storage, Sea, which is a Singapore-based internet company, then Facebook. Now, I also wanted to show you the long-term performance of this ETF. And for this, again, I have taken QQQ as the benchmark. So this also made its debut in September of 2014 and struggled initially for a couple of years, but since mid to late 2017, this has actually been outperforming QQQ. But again, for this ETF too, the big outperformance came in mid 2020, actually March 2020, after the rebound we saw after coronavirus driven sharp sell off. Thanks for watching. I hope that was helpful in learning more about ARK ETFs. And whenever you decide to invest in any ETF or stock, you should do your homework. So for ETFs too, it is you should learn more about what they do, what are their holdings, what is driving their performance, and also look at the long-term performance. And then only you should decide to invest. Make sure to subscribe to our videos so that you do not miss any episode, and I'll see you next week.